an important development which the whole world is watching. Top US and Chinese trade officials are meeting in London for the second straight day in an attempt to diffuse rising tensions between the two economic giants. US Treasury Secretary and trade representative are sitting down with China's vice premier. While both sides have temporarily slashed tariffs, disputes over critical minerals, technology and export controls remain. The US hope this big handshake will unlock key mineral flows from Beijing and pave the way for more negotiations. To understand what's at stake and if there will be any quick fixes to these trade cracks, let's bring in Sumita Karir. Good morning, Sumita. How should one look at the second day trade talks?
Very good morning, Ankur, to you and Kanishka as well. Yes, this is going to be the second day of trade talks. These talks began yesterday, and of course, investors are hoping that the two superpowers can actually improve their ties after a relief that was sparked by a preliminary trade deal that they signed in Geneva last month. And that has actually given way to fresh doubts that are coming in after Washington has accused Beijing of blocking exports that are critical to sectors including autos, aerospace, semiconductors, and defense. Now, remember, these talks are coming in at a very, very crucial time for both the economies, given that trade war is now showing economic impact on both the countries as well, with customs data actually shows that China's imports to the US, they have plunged by over 30% in May. So that's essentially the sharpest drop in exports that the country has seen since February 2020. That's essentially when COVID-19 pandemic broke out. And of course, on the US economy, on the jobs market, on inflation, the impact has so far been muted. However, the dollar remains under pressure. So of course, both sides are looking at stitching up a pact and of course arriving at an understanding so that the economic impact can be minimized, because you do understand that policy making on tariffs that has roiled global markets, that has sparked congestion and confusion at major ports. So that is of course costing businesses, and of course investors are also looking forward to those talks. And of course, like you said, export controls on these critical minerals, that is going to be a key issue between both the sides for talks to smoothen out, for the issue to smoothen out between both the sides.
All right. Thank you, Sumita, for getting us all those details. But now let's also get an expert view on this. Now, Adrian Mowat, he's not very optimistic about the solid announcements in the US and China trade talks. He adds that China has the upper hand in these negotiations and is very well prepared. Let's take a look.
I'm not overly optimistic about the meeting between the US and China. The Chinese are very well prepared for the trade dispute that's in place. I don't think they're going to sort of roll over and give significant concessions, particularly around tariff levels. There may be a few token concessions with regards to non-tariff issues like restricting rare earths. As I look at capital markets, which essentially seem to have priced out any trade dispute now and have a very sort of optimistic outlook, I would tend to be a little bit more cautious about risk assets when they're taking such an optimistic view. I go back to this. The Chinese are very, very well prepared for this dispute with the US, and it's not in their interest to give concessions that are one-sided. So I think these negotiations could prove to be pretty tough.
All right, moving on. After a very public spat between Donald Trump and Elon Musk, an unlikely thaw seems to be forming. The US president said on Monday that he has no plans to terminate the government use of Starlink satellite service, which he called a good service, while brushing off the concerns raised by critics about the scope of influence of Musk's government-linked ventures. Meanwhile, Musk endorsed a social media post by Trump regarding the ongoing protests in LA.
That's right. Let's shift focus to the tech